For me, the planetary boundaries are the most important ones because if we don't have a planet to live on, we also have major problems societally. The first investment we did was in a consumer company called Everdrop, and they already managed to save more than 16 million plastic bottles simply by reducing cleaning products back to their essence and taking out the water of the cleaning products.
Always come back to this, which is like the climate crisis is the biggest humanitarian crisis of all time.
We wanted to build the investor that founders need. Well, what I can share is we've made 47 investments by now, and we've outperformed the top 10% of pitch book vintage that we started with.
Hello and welcome to VCO2, the podcast that helps you become a smarter impact investor and better climate tech entrepreneur. Today, we're joined by Tina Dreimann, the founder and general partner of Better Ventures, one of Europe's most active network of impact business angels. In today's episode, we'll dive into community investing and specifically in a formula that was shared by Tina with me, which says community plus tech equal impact plus return. Before we start, don't forget to leave a like, a comment, and subscribe to the YouTube channel. Or if you're on Spotify and Apple Podcasts, don't forget to follow and give us a 5-star review. The comment of the day that you can leave is Better Venture. Let's dive in. Tina, thank you so much for coming on the show. And also thank you, Tim, if you're listening, for the introduction. And I guess to get right in, I must ask you this question. What is Better Ventures and why did you decide to be a .io website? What does that mean?
Thanks first of all for having me. We founded Better Ventures 4 years ago in times of coronas because we were convinced that entrepreneurs are the solutions to the biggest problems of our times, that we should make each other succeed. So what we are now today is a movement, a alliance of over 80, almost 100 entrepreneurs that invest in early stage impact startups and ambitious teams that really want to make a difference with a scalable business model. And there you already have the impact plus return. And why.io? Quite simple. It stands for impact only. So our focus really lies on integral business models that combine economic effects with true difference, positive impact, be it on society or our environment.
Yeah, and I love how you played with the word on the website. But one thing you just said is you mentioned the biggest challenge that we face. What is it exactly, according to you?
You ought to read the World Economic Forum Global Risk Report. It maps it out quite perfectly, or also must know the planetary boundaries. For me, the planetary boundaries are the most important ones because if we don't have a planet to live on, we also have major problems societally. Nevertheless, Better Ventures invests along all the sustainable development goals, also into health topics and societal topics as well, to diversify our portfolio and to really make a difference on multiple dimensions at the same time. And we do have a big mission. The mission is to become Europe's, and to scale, we already are, to scale Europe's leading alliance for impact entrepreneurs.
I love that. And I love how we will talk about it later in this conversation, but how you can align smart capital, as they call it, to funders. But so on your website, you say that you invest in funders fixing the world. You already mentioned a little bit about it, but can you explain a bit more about your investment thesis, like to which degree they fix the world?
I think the best way is to point the founders out because they are the ones doing the job, and Better Ventures is founders first. To give you a few examples, we have a fantastic team from Munich building artificial intelligence driven software for forests and carbon credit trading. They're called OCell. Just recently raised their Series A, and they both help the foresters to manage their assets, trees, and to make them more efficient in terms of environmental impact and
Are they
tradable.
competitors to Morpho?
Not sure, possibly.
It's a French company that does a bit the same with like AI and satellite imagery. So I think it's more or less the same like landscape.
A little less because they're not working with satellites, be more accurate, but then definitely still playing in the same field. So that's one example. The first investment we did was in a consumer company called Everdrop, and they already managed to save more than 16 million plastic bottles simply by reducing cleaning products back to their essence and taking out the water of the cleaning products. Fantastic success story, scaled all the way beyond Series B within just 3 years. And third example, a Swiss company called Oxyle, who developed filters for the micro pollutants in water that threaten our health, carcinogenic PFAS. And they were even featured from Norsk and so were two other startups on the Times Square to have the potential to impact over 1 billion lives. So those are the ambitious teams that we back. I can name you a lot more like Greenlight, EcoPlanet, and Shit Power. I'm in love with all the founders. And we really look, is there a big problem? Are they solving it? And then is a team, an A team, do they have the capability and the drive to really make a difference in a short time?
That makes sense. And it's really like projects which are fixing the world and fixing also, I can always come back to this, which is like the climate crisis is the biggest humanitarian crisis of all time. So you mentioned, for example, the last company trying to filter out some of the pollutant that we have in the small one. Those affect our health more than the planet, really, right? Like, which I think is very interesting for people to understand.
I might even disagree. I love diverse discussions. Why? Because if you look into the planetary boundaries, climate is the most popular field at the moment, but we are equally facing a red zone in soils, like that sustain us with food. Being acidic, we also face a problem with water for our world population. So there are several topics beyond climate that are equally important and currently, sadly, not visible or in the news. Biodiversity.
No, indeed. But I guess I'm curious. Like, I'll pick your brain on that then. But my take is that the planet will live long after humanity if we don't fix the problem, right?
Absolutely. And agreed that climate change is one of them. For example, plastics in the ocean don't have anything to do with the climate, but are equally damaging to the world that sustains us.
That makes a lot of sense. Well, I guess I'll drive you to another topic, and maybe I'll pick your brain a little bit. But you could have built a VC firm, but you chose not to, and you chose to engage in a community-driven model. Why did you not build a VC firm instead?
It's quite simple because we wanted to build the investor that founders need. To find out what we ought to build, we actually listened for half a year. So we went lean startup mode, even though we are investors, and talked to plenty of teams just asking for what their biggest problems are. And they were the access to the first investors because you have to talk to every angel individually. And then in addition to that, just like me, every founder has similar topics like building the team, accessing the first customers, admin stuff. And we're like, okay, we're as experienced entrepreneurs, very experienced in that sense and field, and so are other entrepreneurs. And we need to accelerate each other. That's where the idea arose of uniting the strongest entrepreneurs of Europe to invest in early stage impact startups to really also gain speed. And in addition to that, also my co-founder, like two fantastic co-founders, Dr. Sadek Duvinash and Christoph Behn. And Christoph always said, let's unfuck VC. Why do I use this word as a lady, unfucking? Because the VC game, you can really call it game, has certain logics that are not entrepreneurial and that don't drive success. And one of them are the periods of times you have to invest as a VC. And in our community-driven model, we have a lot more freedom in the sense of what kind of business models we can and want to support in what time frame. We are talking about solutions, Hugo. So you know that deep tech is definitely one of them and has way different investment time periods than, for example, a B2B SaaS company. Both being equally attractive, but not in the same time frame.
And how does that affect returns, according to you? Financial returns, I mean.
Oh, we are shooting extremely high, and we're doing really well compared to our vintage. That is why, because we're investing early stage, the upsides are higher, and we're using our group intelligence to make profound investment decisions and to de-risk and diversify. So we have a very, I would say, thought through and smart approach to use the knowledge we have in our group to make better investments together and to have more fun. The returns can stay equal if you take out the pressure of having to return money within 7 years or even within 2 years, in the private equity scene.
That makes sense. Can you share any numbers with us? I'm always curious to get some data points, but I know it's always, quite confidential.
Well, what I can share is we've made, 47 investments by now, and we've outperformed, the top 10% of PitchBook vintage that we started with.
I love that. Very, very interesting model. I'm curious, just very briefly, for people to understand, like, how do you build a business model around a community-driven impact investing firm or like company? Because I don't know if I should call you a startup, a firm. I don't exactly know how to call you, but like, how do you build a business model around that?
Well, lean, very lean startup like. We started with the most riskiest assumptions. Can you say that? With the riskiest assumptions is probably already enough. And number one was, are there enough impact startups? Like, because to have a business, you also need to look at the market. And gladly, particularly strong founders move into that field. So the number of startups has scaled over the last 10 years and continues to do so. And then the second assumption was the best teams want to work with us because we always knew if the best founders like better ventures, we would automatically also get the best investors into our group. That we checked really early, and I'm really proud of all the teams we work with and to be part of their journey. So that paid off. And then last but not least, we also had to make sure someone wants to pay that, right? And there are club models, and we have a 80 NPS, which is insane. I don't know if you know Net Promoter Score. That's a recommendation score, and the angels and the founders are equally happy. The founders for the way we interact with them, and the angels for the way we professionally take off everything off their shoulders that they don't like to do, and then they can focus on what really adds value and what's most fun to them.
Yeah, and that's very interesting. And something you mentioned, which really caught my attention, is you want to have obviously the best funders, at least from an investment perspective. So the best startups coming to you for money. How do you make sure that they are attracted to you as an investor? Like, how do you make sure that you are sexy enough for them to come to you and want your money, basically, and not someone else's money?
I actually like to quote a founder that we have invested in, and on a panel unasked, she asked that we work with them completely differently in the investment approach. So they were prepared to pitch, and of course, they also pitched, but we asked them a lot of weird team questions. And like, no matter which investor you talk to, what the success factor is, they will always say team, team, team. But we really take the time to ask the right question, like what drives you? What's the problem you're solving? What are your roles? So we are really team first, and they notice that. And then secondly, in the interaction with the entrepreneurial angels, we get fantastic feedback, even on the questions that are asked, because just an hour of entrepreneurs asking you the right questions um, already propels you forward. And since all of the angels that we work with have built their own company or led their own companies, they are on eye level so that they know how the person on the other side feels and interact with them accordingly.
Yeah, and I think we'll get to more of like details around like the support that your angels provide to startups. But just before that, I have one last question of more like on the model. I mean, Tim from What Fund recommended you. Obviously, you don't invest at the same stage. What is your relationship with VC firm that invest very early like you do? Like how do you build that relationship with them, although you're trying to create a new model that is very different from them?
They appreciate us very much because we fill a gap before them. In the US, and the US ecosystem is way more advanced already than the European startup ecosystem. 90% of the investments are already done via groups or clubs, and Europe is
Wow.
behind. Like, we're currently forming, so you see more and more similar models, regional clubs, country clubs evolving. But and not always professionally. The VC funds, we have long list of close friends that we co-invest with. Like really the A funds appreciate us because A, we are professional. We can share the process and the due diligence with them. And B, they get fantastic co-investors who bring smart money to the table. And that only helps the success of their investment.
Yeah, and if you want to be a bit greedy, that means that you get access to the best deals by partnering with you, and also potentially the best returns later. And from an impact perspective as well, the bigger the company becomes, the
The
better it
bigger
is
the
for
impact.
exactly right.
I like the way you
Um,
put it.
For sure. Well, look, I think what's interesting for me to understand today is this concept of smart capital, which I think is quite a new term. I don't know. I haven't been around enough for a long time enough to quote that, but I think it's quite a new term. What do we mean by smart capital, and how do you feel like you're adding value to the startups?
Before I dive into the answer, I have to note that I don't like the term. Because if you have smart money, it automatically implies that there's also dumb money,
Don't
and
you think we have the money?
I don't like to degrade kinds of capital. So I would rather call it capital from private investor that bring experience to the table. So I think that that's a better description of smart money. And how does it make a difference? I see and breathe it every day because people who've done it before can give you shortcuts. And if you have a very smart team that knows what they don't know and asks the right question at the right time, like they are taking leaps forward. They're not developing like a regular team because they know where to take the shortcuts by using the context, by using the experience and not making the same mistakes again, but making their own mistakes. So it's like a entrepreneurial evolution, which is possible when infusing smart money.
And how does that look like in practice? Is that like weekly one-on-one call with angels? Is that regular discussion with Beta Ventures? Like, how does that look like in practice?
So I think the most important part is the selection, like even before investing, that you make sure you have the right people on board that pay into your business model and into what you need. For example, we even from Better Ventures, we check like does the startup have everything in the cap team that they need to succeed? And sometimes if we don't have it, we even look for it actively. For example, saying, hey, we need an expert or a leading entrepreneur in that space because you will have to go into retail. That's the first part, which I can recommend. And then in working together, it's really the onboarding, doing a kickoff, managing expectations, building trust, which is often underestimated. Like we're talking about deals, so it's very impersonal, but in the end, it's all about psychology and people working with each other. So you need to take the time to give transparency with the reportings because that will build trust and also will give investors the opportunity to support you. At the same time, you have to be very careful as investors because you don't want to sit on a founder's lap. Like if you have to do that, you made a wrong call in the investment decision in the start. In the end, the founders are in the driver's seat, and I do recommend monthlies, not with everyone, but you have to decide like who's the key counterpart you talk to regularly. And I recommend to know your cap table very well so that you can reach out to the right people at the right time. And also start an informal communication. Like we have a WhatsApp group where the magic happens and you have a founder asking, hey, I need space in Berlin for storage. And then you have within seconds, you have two people answering, okay, here's the address, da da da.
That's very powerful. I'm curious, like, how many people do you bring in with you in like a regular deal? Like, is it 40 people? Is it 100 people? Like, what's the
And
average?
on average, there's 5. So we're really talking about potent angels. We're not a crowd. Professional angel investors with a minimum ticket size usually of 25K, average ticket size of almost 50. So you don't get a fizzled cap table. How would you say that in English? We're not cutting it into pieces. Quality over quantity.
Yeah, I love that. And I think it makes sense now that you say that you need to pick the right people, because if you only have access to 5 people, but those are the 5 important people, I think it can really drive a lot of value. And I just come back to what you were saying earlier about like going to people that are more experienced than you to talk about the topics you care about. I think that's a bit of what I'm trying to do with this podcast, actually, without realizing it. But I'm really trying to do the same, which is like, I want to learn how to be a good impact investor, and therefore I go and talk to the best impact investors I know and learn from them. And I think in this 1 hour conversation that we have, I get to learn a lot and avoid some of the mistakes, as you said, for startups. So I see a bit of a similarity there. But going back to the community, so the power of the community, I feel like, is that you always find someone that has an answer to your question, which I think is very important. What would be one of the drawback of having a community? I mean, I guess the model is probably not perfect, right? Like, what would you improve, or what's a drawback from that model?
I think no model is ever perfect. And that's why the formula is community plus tech equals impact and return. Because managing a community and drawing value from it is mastery. And we only master it because we have built the tech to do it and continue to increase the features, the functions of the platform so that really you know who is the right person at the right time. And only having that personalization and tech-driven intelligence as well enables us to scale Better Ventures as the strongest alliance for impact entrepreneurship. And fun fact, before we switch to the tech, we had quite some people in the beginning telling us we were crazy. Like, like why enable them to invest, right? Why don't just raise a fund? It's too complex, blah blah blah. But it's not if you do it the right way and with the right people.
Is there not a saying that says, like, basically, if people don't call you crazy, it means like you don't have enough ambition? Is there something like that? Great. Well, very interesting. So let's talk about the tech, because the community part we understand, right? Like, the community is, you bring the best angel investors that are former entrepreneurs, and with that, you bring the answers to the questions that startup have, and to the guidance they need to succeed. That makes a lot of sense. What about the tech then? Because obviously, I can assume that, you having a lot of deal flow, you already made 47 investments, you have a lot of people, it's a lot of communication, a lot of documents to share. Like, there's a lot behind it. How does that play out with the tech aspect of your business?
I mean, we as a founder team, we've built multiple digital business models in the past before building Better Ventures. So we are savvy in the sense of how can tech help you. And you're completely right that it's an end-to-end topic, like starting from sourcing all the way to the exit. And we always prioritize based on where does it add the most value. And by now we already use artificial intelligence, our own platform along the whole value chain of investing. That starts with a tool helping us to identify talent movements, to find deals early. Then we get 200 deals per month as applications we need to prioritize. So when we started out small, like you start from top to bottom, but if you do that with 200 deals, you will miss the best ones that are hidden in line 119 too, right? So the intelligence helps us to look at the right fields and teams first, talk to them early and not like go through it chronologically based on time applied.
That makes sense. So, like, what you're saying, that you have an AI that looks through all of the pitch decks and say, this is potentially a good deal for you. This is potentially a deal that you look at later. Okay. How did you build that tech? I mean, obviously, like, if I were to talk to any VC right now, they would love to have access to that technology as well. Like, you could almost sell it as a product. How did you build it?
With the right people. To be honest, I'm not a developer, so I know what we need and where the value lies, but I can't build it myself. So I'm very lucky to have a fantastic co-founder, Cedric, who loves to dig deeper, and we're lucky to have Alexei, our first head of engineering that we hired. We've worked with him for 7 years in the past already. Who's on the one hand a leader and a builder, and really makes these things happen. Then it's a classical product development, prioritizing, scoping, testing, doing user interviews. So luckily, the angels built it with us. Often we talk to them before we build it because we really like we don't want to waste money on stuff that nobody needs.
Yeah, no, for sure. No, specifically as like a relatively small firm. Well, let's switch gears a little bit and talk about another topic that you're very passionate about. And you already touched on it a little bit earlier, but you are a founder first investor. I don't know if that's a term, but like, you really care a lot about the people more than anything else. Obviously, that makes sense because you're at early stage. What is a good founder to you? Like tomorrow, I want to go and identify a great startup just by looking at the founders. What does that look like?
The Harvard tried to decode the founder DNA for decades. So really great studies summarizing what a great founder type is. But of course, we don't only look at the founder or one founder, but at the whole team dynamic as well. On the individual level, it starts definitely with: are you driven? Are you able to make decisions? Are you courageous, brave enough? Do you have curiosity? And can you deal with risks and ambiguity? And that's a certain profile, personality profile, really ingrained from the start of your life that has that tendencies. Of course, you can also develop them, but there are also talents that already have that and are made to be founder types. So that's the first part. But the second part is on the team level. You need at least one person like that who can make decision, who wants to make it big, who drives the business. And then you need to enhance it and really see how diverse is the team in the sense of functional experience. You don't want to have two economic alumni building a tech business. It's not always the best way to do it, right? So you also want someone who's already built tech products, and that is always different based on the business model they want to build. So you really have to check what capabilities do they need. Is it ingrained in the team? And then lastly, how do they work together? How do they make decisions? How do their personalities enhance each other? Are they missing something? Do they know that they are missing something? So there are a lot of great things you can do with a team and also help them get better if they don't have certain skill sets yet.
Yeah, and just going back to the founder specifically, you mentioned that it's something sometimes that you have in you from a long time. Do you ever ask those founders like about the childhood, about how they were growing up, and all of that? Because I feel like that's almost sometimes a determinant to the success of a founder, right? Like it's for example, if you done high level sports when you were younger and you competed at super high level, you probably are super competitive in a sense, right? Like, is that something you look at? Is that something you ask them?
We do ask one question, and that's like, what was the hardest time in your life and how did you deal with it? And from just that question and answer, you already learn a lot. Like, what did the person go through? How did he or she come out on top? And what did he or she learn from it? And it really, like, sometimes things we hear, that person already has resilience, and resilience is an important factor for founding a company. And fun fact, resilience is not ingrained in your personality, but something that can be learned.
For sure. And that's very interesting because I don't know if listeners will feel the same, but when you asked that question, I automatically went back to, what was my moments, which is a
Giving me
tough one.
goosebumps.
Some investors say that the value of a team is mostly related to the top quality of one of the founders. So they often say, for example, if you have a super good engineer that can code amazing product, that's a
Mhm.
value of the team. Do you see it like that, or do you see it more as how the relationship works between the different founders?
Honestly, I think you need both. It doesn't help. Like, you need rock stars in general, but if you have one rock star that's not able to work with the rest, it also leads to challenges and even team breakup. And often, a reason for startups to fail is team, and you can sense that early and help that it doesn't happen that often as an investor, which is also impact, by the way. Like, really quick. Since you want to learn to be a great impact investor, there are two dimensions. The first one is, of course, in what you invest, and that has an effect on the world always, positive or negative. So anyone in the world is actually an impact investor, just maybe not in the right topics. And then secondly, it's also, how are the companies built? That's a second impact, because if you have 1,000 employees in the future, you already, just by being the entrepreneur, working with the team, giving in the daily work environment, you have a major impact on people's lives. So I'm always thinking in these two dimensions. The first one is, what do we invest in, but also, how do I build my own company, and how do the founders build their cultures, companies, teams, and scale them?
Yeah, and on that very specific topic, I had a great conversation with one of my guests, which was about VC investors that push for ESG type of management in their company because they believe that if you build a great company, not only from like a business perspective, but as well from like social, environmental, and governance aspect, that also pushes up the performance of the company. And as you said, like this is also the biggest component of impact because you want to build a company that people like, where people are happy to work with, that respect all of their, all of the people throughout the value chain and all of that, which I think is very interesting.
And last but not least, also in sense of impact, we need an economic transformation, right? So we need to replace existing business models that harm the world with equally attractive business models that work hand in hand with the world. And I truly believe that yes, we are a solution, innovating VC, but no, we are not enough, right? So because you have the whole value chain, and we also need VCs to change their logics, and that happens, right? The investment periods are changing. We have evergreen funds in the US emerging, or rolling funds that have a different logic in the terms of what is the time span that we are building fruitful businesses together. So we need multiple players. And also, Better Ventures is currently evolving. So, in addition to entrepreneurial angels, we are also adopting family enterprises that need to transform their own businesses. Why? Because they're also entrepreneurs. So, they speak the language of the startup, they can work on eye level. And B, they even have bigger budgets. So, you need the value chain, like angel, smaller tickets, diversifying, much bigger buckets coming in at the same time or afterwards when you know the teams. So we truly building an ecosystem, like starting from the very front, and we're not a fund for a reason.
That makes sense. And on that family business, I think it's very interesting because in Germany, you have an history of great industrial family companies, which means that
The
for
German
deep tech startup,
Mittelstand.
exactly right. So like for deep tech startups, it's probably amazing to have the support from this type of families as well.
Yeah, and you can again make leaps, not like building everything from scratch by yourself, but working with experienced production companies that can help you build a production line or even adopt products into their own so that you can scale your business much faster. And we need that collaboration much more. I am convinced also that it hasn't happened enough in the past. So even over the last couple of years, it has decreased the collaboration between startups and companies, bigger companies. And we again need to shift that back towards working together because we can only solve the biggest problems of our time if we all play part in the solution.
What's the common challenge you see for startups that are trying to partner with these bigger enterprises and larger company? What's the common challenge you see?
I see 3. The first one is, often they don't have a strategy. Like, they do invest, but they have not a clear mission. Is it for financial or transformative reasons? So there needs to be a clear setup why the partner is doing it, and it needs to be transparent, number 1. The second one is intercultural differences. Like, they often don't speak the same language, so you need an expert also on the bigger company side who understands startup, and you need a leading person in a startup who understands bigger business, so they can even master just the communication, not only the collaboration. And then in the end, it's also a setup topic. Like, how do you set up the right working models? Is it by investment? Is it by a partnership? And then it's different depending on the startup we're talking about.
Yeah, I love that, which I think is something that we are yet to crack the code on. Like how do we partner more between big corporates and small startups, which I think is true in the climate tech slash impact space, but also true like in any other space as well. Like when software companies also struggle to sell their software to bigger companies and stuff like that. We're getting towards the end of this episode, and I have one more section which sometimes guests are a bit scared of, which is a fire question. So
Fire
I'll
away.
ask you exactly right. So like I'll ask you a lot of questions within the next 10 minutes. The goal for you is to answer within 1 or 2 sentences maximum. We have to get straight to the point, and what comes out naturally as an answer. Are you ready
Mhm.
for that?
I'm totally ready for that.
What's the biggest myth about impact investing?
biggest myth is many people mistake it with philanthropy and fewer returns. I oppose to that.
That's something that often comes back. Is there any specific tech trends or climate tech trend that excites you right now, like something that you're looking at very closely?
Definitely artificial intelligence and deep tech.
How do you think about democratizing impact investing for people that are not former entrepreneurs? Because you're doing it right now for like big families and former entrepreneurs, but what do you think about doing it as retail normal people that haven't built a company in the past?
Would love to do that, but see dangers because startup investing is high risk and you need to have the right budget sizes to be able to take that risk.
Do you think a community investing company could be global, or does it has to be local in a small ecosystem?
It needs to be global because only by scaling better ventures we will drive the difference that we want to make.
Yeah, and I'm excited to see better ventures growing in the future. What's the hardest lesson you've learned in your investing journey?
Hardest lesson. I don't think there's a hardest lesson. We learn lessons every single day by talking to founders, and it's a roller coaster ride with ups and downs and a tendency like this.
Is there any mistake you've done that you regret while investing?
I've made many mistakes in life, but I don't regret them. I learn from them.
I love the entrepreneurial mindset. If you could change one thing about venture capital, what would it be?
The time periods that you need to invest in the funds, get rid of them.
What's one piece of advice for an impact funder raising capital right now?
Know your customers.
You've been named an Investor of the Year by the German Startup Awards. How did that come to be?
Simply because we are doing something that or building something that no one has dared to do yet, like an entrepreneurial movement with focus on impact as a professional investment company.
You're facing a lot of the challenges of the world on a daily basis. Like you're at the forefront of all the climate challenges and biodiversity and all of the other boundaries that we're crossing every day. How do you stay optimistic?
You're gonna make me cry. Simply because we have to. Like, there's no other way. We have to work on solutions until the very end. Two kids, and one of them asked me when we went sledding. No, he didn't ask me. I asked him because he was being weird, and what's going on? And Tom said, "Well, I'm sad because I don't want to like I won't see that much snow in the future." And I'm like, "Fuck." It's true, and at the same time, like I could tell him about startups, founders in particularly working on solutions, giving him hope.
I love that. And to actually change the tone a little bit, what's the best climate innovation you've seen, the one you're the most excited about?
Look at the on roads model by the MIT because there's no one, we need all of them.
Couple of last questions. What are the three most important things to be a successful impact investor?
Do your work before investing because once the decision is made, you're in it, no matter where the startup pivots. So have a clear framework, number two, really based on your must have criteria and nice to have criteria, assessing how big is the problem. Does the startup work on a solution? What's the time to impact? How many people can be affected? Are there risky side effects? It's all there, so you don't have to reinvent the wheel. Just take what's out there.
Love that. I think that's very interesting. Also, like just to leverage the existing. I don't think that we need to rebuild everything for impact. It's just like standard investment
Yeah,
in the end.
look at the global impact investment network. Like it's all there. There are many frameworks that you can use to challenge your own impact investment approach, be it as individual or as a fund.
Great. What's one book, podcast, movie that someone should watch, listen to learn more about impact investing?
Podcast or movie. I think rather watch Sir David Attenborough to see how the world has changed over the last century and what we have to solve to build the right businesses.
Great.
It's a wake
One
up
last
call.
question. Yeah, I'll watch it afterwards. One last question for you today. Who's the next climate investor that I should interview or impact investor?
Oh, you should talk to Nathalie Moral. She has a private fund in Switzerland, solely focused on climate.
Super interesting. Well, thank you so much for today. I had a blast discussing with you. I learned a lot about community investing and how it can benefit startups. I also learned a lot about early stage investing and how you look at funders and people, and also about climate and the challenges we face in general. Do you have one last word for the audience?
Stay sane, stay optimistic, and do something. Get active. Be it with money, being with founding your own company. We need everyone involved.
No, I love that. And if you're still listening to this episode and you made it to the end, you can comment, stay optimistic. That will be the word of the day. I love it. I think people can find you online on LinkedIn or on betterventures.io. I'll put the link in the description. And if you like this episode and if you like the show, don't forget to like, comment, and subscribe to this YouTube channel or podcast, depending wherever you listen to us. Thank you so much, Tina.
Thank you, Hugo, for shining the light on important topics. It was fun.
It was great.